For a while, many of the portfolio lenders would not lend on Airbnb and short-term rentals. Fortunately for Airbnb investors and short-term rentals investors, there are options now, and you can get portfolio loans. Now, when can we use the Airbnb income? Typically, on a majority of the funds, the guidelines are as stated.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Bo Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast, and I'm your host, Bo Eckstein. And today we're going to talk about how to finance short-term rentals or Airbnbs on a portfolio loan program. For a while, many of the portfolio lenders would not lend on Airbnb and short-term rentals. Fortunately for Airbnb investors and short-term rentals investors, there are options now, and you can get portfolio loans. So I have many clients that either they flip into a short-term rental, so they BRRRR into a short-term rental, which is a common strategy I see. So they'll do a fix and flip loan. And then once the property is complete, they'll get it reappraised, pull out their initial cash injection, and then rent it out on a Airbnb, a short-term rental. And so that works really well because you can get most of your cash back out, if not all, if you're buying right at least, and then get high cash flow, a lot better than long-term rent. So in order to finance these properties, so if you're acquiring a property and it does not have Airbnb track record, basically what we need to do is finance it. It has to qualify from a debt service coverage ratio based upon whatever the long-term market rent is, okay? So if market rent will justify that loan amount, then we can do a portfolio loan. Not all portfolio lenders do short-term lending or funding of these types of transactions, but about 50% of them will do those. So it's really just navigating the scenario. Now, when can we use the Airbnb income? Typically, on a majority of the funds, the guidelines are as stated. The borrower must use an online service such as Airbnb, VRBO, HomeAway, etc., to document receipt of rental income. Documentation verifying rental income receipts over a minimum of the last 12 months. So you got to have 12 months of documentation. Debt service coverage ratio will be calculated using the average income receipts over the last 12 months. If documentation cannot be provided covering the last 12 months, the property's debt service coverage ratio shall be calculated based on market rents from appraisal form 1007 or 1025. So, to answer your question, you can get financing no matter what. It's just the proceeds might be reduced if we have to use market rent as a long-term market rent versus what the Airbnb, because market rent might be $1,800 a month, but if you're Airbnb-ing it, it's producing $4,000 or $5,000 in gross receipts each month. So there's a big difference there. But once you acquire and you have a 12 months track record, time to refinance, we can use that income. And these are all based on debt service coverage ratio and obviously value, right? So on these properties, we don't need tax returns. We don't need your personal tax returns. We do usually want to see 2 months of bank statements just showing enough in reserves for about 4 to 5 months of PITI payments. But that's about it, okay? So you have good credit, and depending on the LTV you're looking for on a cash out refinance, or rate and term, that's how the pricing gets, that's how the loan gets priced out. Very simple, guys. Anyways, getting a lot of requests from my friendly short-term rental friends out there looking to buy, fix, and then instead of convert to long-term rental, convert to an Airbnb, which is a great model because if you're renovating property, right, you create the equity and then you create a surplus of cash flow by running it as an Airbnb. I love this model. All right, guys. Thanks for watching. Please subscribe and share this with your friends and colleagues. See you on the next episode.